Banks play a crucial role in a country's economy. They are not only institutions that collect funds and provide credit, but also contribute to economic stability, payment systems, and monetary policy management. The development and types of banks illustrate how these financial institutions adapt to society's needs and contemporary challenges. 1. The development of banks. The history of banking dates back to ancient times, but modern banks as we know them today began to flourish in the 19th century. Below is an overview of the development of banks. A. Banks in ancient times. In ancient times, banking functions existed in simpler forms. In Mesopotamia around 2000 BC, institutions served as places for storing money and goods and also provided loans. Similarly, in ancient Greece and Rome, financial institutions akin to banks facilitated trade transactions and money storage. B. Banks in medieval Europe. Between the 12th and 16th centuries, banks began to develop in Italy, particularly in major cities like Venice and Florence. These banks introduced bookkeeping systems and accounts to simplify transactions. They also began offering loan services and money transfers between cities. C. Central banks and modern commercial banks. In the 17th century, central banks began to emerge, such as the Bank of England, established in 1694, which became a model for central banks in other countries. Central banks play a vital role in regulating monetary policies and managing national foreign exchange reserves. Meanwhile, commercial banks began to develop in the 19th century, offering deposit and loan services to the public and supporting businesses in financing their operations. 2. Types of banks. Banks can be categorized based on their functions, services provided, and establishment purposes. Below are the common types of banks in the banking world. A. Central bank. A central bank is an institution with a primary role in regulating a country's monetary policy. Its main tasks include controlling the money supply, setting interest rates, and maintaining economic stability. The central bank also acts as the lender of last resort, providing loans to other banks facing liquidity problems. Examples of central banks. Bank Indonesia, BI, the Central Bank of Indonesia, responsible for monetary policy and financial system stability. Federal Reserve, the Fed, the central bank of the United States, overseeing monetary policy and the financial system. European Central Bank, ECB, responsible for monetary policy in European Union countries using the euro. B. Commercial bank. Commercial banks provide banking services to the general public, including accepting deposits, providing loans, and offering other financial products. They serve individuals, companies, and government institutions. Examples of commercial banks. Bank Rakyat Indonesia, BRI, Bank Negara Indonesia, BNI, Bank Central Asia, BCA. Commercial banks may specialize in specific products or services, such as retail banking, corporate banking, or international banking. C. Rural banks. Bank Perkreditan Rakyat, BPR. Rural banks focus on providing microloans, often to small and medium-sized enterprises in specific regions. BPRs are smaller than commercial banks and typically do not offer payment services like interbank transfers. They play a vital role in supporting local economies and assisting communities that lack access to larger banks. D. Islamic banks. Islamic banks operate based on Islamic law, Sharia. Transactions in Islamic banking must be free from elements of riba, interest, gharar, uncertainty, and maisar, gambling. Instead, Islamic banks offer products like mudharabah, profit sharing, murabaha, cost-plus financing, and ijara, leasing. Development banks. Development banks are established to support the development of specific sectors, such as infrastructure, housing, or industry. These banks typically provide loans with lower interest rates or more flexible terms for national development purposes. F. Cooperative banks. Cooperative banks are owned and operated by their members, usually composed of community groups or cooperatives. G. Digital/online banks. Digital banks or online banks provide all their services through digital platforms, such as mobile apps or websites. These banks do not have physical branches and focus on accessibility and cost efficiency. 3. Roles and functions of banks in the economy. Banks play several crucial roles in the economy, including providing financing. Banks provide credit to individuals, businesses, and government sectors to support consumption, investment, and economic development. Driving economic growth. By offering loans and financing, banks support economic growth, create jobs, and help productive sectors to thrive. Conclusion: banks are vital institutions in a country's economic system. From their humble beginnings to becoming complex financial institutions, banks have evolved to meet the needs of society and businesses. The diversity of banks ranging from central banks, commercial banks, to digital banks shows how the banking sector adapts to technological advancements and economic dynamics.